All right, so we've just had quiz number 5, and I think we might be able to squeeze in one more just to get you in the mood for the final. We'll try and squeeze in one more. I guess it'll probably be next week because we don't have loads of time left. So be prepared for that. Your next homework assignment, cost estimation, that's due on Thursday of this week. So submit it to MU Online before 8 o'clock on Thursday. And today we're going to do 2 relatively small and brief sections of the book, Indirect Cost Allocation and Activity-Based Costing. You're already done with the project, so you don't have that to worry about. Any questions about our discussion on the exam or these announcements? Okay. Now, indirect costs. Let's review then, revisit that concept. It's something that we've talked about on a couple of previous occasions. And remember that indirect costs are those expenses that are difficult to assign to a certain level of production. So for instance, going back to the idea of if your business is making Twinkies, then some costs are directly related to how many Twinkies you're making. For instance, if you're making 1 million Twinkies a month, you know exactly how much sugar you're going to require, you know how much flour is needed, you know how much plastic you're going to buy, you know how many preservatives you're going to purchase, lots and lots of preservatives. So those are the direct costs. And the indirect costs are those expenses that it's a little bit trickier to say exactly how much of it is required for a certain amount of that thing. And so there isn't a recipe of how many hours of accounting is required to make 1 million Twinkies per month. And there's no fixed recipe that dictates you must spend a certain number of dollars on rent for 1 million Twinkies per month. And so there are certain expenses that, because it's difficult to directly assign to a specific output, we collect it in just on the basis of a percentage of the direct costs. And so they have to be recovered. You can't just absorb those costs. They have to be somehow folded into the prices that you're charging your customers, or they have to be recovered in some way. And there's a lot of different ways to allocate those costs. And so allocating the costs means just what are you going to assign those costs to in order to recover them. And so here are some cost categories that are often thought of as indirect costs. And so taxes, property taxes to be more specific. You know, any business is going to have to pay property taxes either directly, or a portion of their rent is going to cover property taxes. And so if you're on the line for property taxes, then maybe one of the ways you could allocate those costs is on the space occupied. Now think about this. What if you're a manufacturer and you're making more than just Twinkies? So let's say that in one corner of the building you're making Twinkies, in another part of the building you're manufacturing turkey dinners, and then in the third part of your building you're making bicycle gears. For some reason you're in, those are the 3 businesses that you're in. And so, you know, if you've got these property taxes that have to be paid, then what this is suggesting is one of the ways to figure out how much of the property taxes you're going to try and recover, like building into the price of your bicycle gears versus building into the price of the Twinkies, would be on the basis of the space occupied. So why do you think that that's the suggested allocation basis? Why do you think they're saying it should be on the basis of like square footage of how much each activity is taking? Why would they say you should base those costs based, you know, like how much space the Twinkie operation is taking of the warehouse versus how much space of the gears operation? I mean, there are other ways that you could have allocated those costs. You could have allocated those costs just on the number of units that are being sold. So like if you have to pay $100,000 in taxes, why not just, if you're selling a certain number of each item, why not just divide it by the certain number of each item? You know, like if you're selling 100,000 items, like 33,000 of everything. 33,000 turkey dinners, 33,000 Twinkies, and 33,000 bicycle gears. Why not just collect $1 from each item that you're selling, and then that can go to cover the cost of the taxes?
Property taxes depend on the size of the property you're using.
Very good, yeah. And so, that's how the cost is related. The cost itself is related to space, and so it makes more sense to recover it on the basis of how much space is being used. And think about it, a Twinkie costs less than bicycle gears, and so if you just added $1 to everything, then like the Twinkies are now, you're going to have to charge your wholesaler like $1.05 for each Twinkie, whereas before it was just going to be 5 cents for the Twinkie because there's so little that goes into it. And so if you just like split it up and made it a simple average, then you'd be charging too little for some things and too much for others. So it's just more rational to try and relate the allocation to how the cost itself arises. And so look at some of these other cost categories. So if your electricity, meaning your power cost. So don't just allocate your power based on the number of outlets that are in each area. Like what if the manager went into each of the 3 spaces in the warehouse and counted up the plugs? Okay, the Twinkies operation has 10 plugs. The bicycle gear operation only had 2 plugs, and so I'm going to charge more cost to the Twinkie guys than to the bicycle gears. But it's not just based on how many plugs you've got. You should actually relate it to how much electricity is used. And the number of plugs and the amount of usage of that electricity isn't necessarily the same thing. So always try and allocate the costs in a manner that most clearly reflects how those costs are arising. So you can see another one, quality control. And so you could allocate the costs of quality control with the number of inspections that are occurring. So if you have a meat packing plant, and for whatever reason maybe the USDA requires more inspections of beef than it does of pork. So then if you're going to allocate those costs associated with the USDA inspections, then you'd have to allocate more of your costs into the price of the beef than to the pork because, one of those things is causing more of the costs. So it's a pretty logical idea. That the logical idea is recover the costs as close to what causes them as possible. And so that's what we're going to practice in this in-class exercise. We have a construction company with 3 cost centers, as they're called. And these 3 cost centers are an excavation company, a company that does steel reinforcing, they assemble the reinforcing, and then construction surveying. And we've got some data for those companies. We know how many employees they have. We know what their base revenue is. We've got the number of projects they're currently involved in and other data that's specific to the activity in question. For example, the excavation company, we know how much volume they've excavated. The steel assembly affiliate, we know how much reinforcing steel they've assembled. So what we're going to do is step through these questions and figure out if $6.9 million needs to be recovered. So these are like fees that are going to cover like the electricity, the rent, the taxes, all of those things that are kind of hard to specifically tie to a certain thing. But the overall parent company, those are bills that have to be paid. And so the overall parent company is going to get the money to pay those bills from the 3 subdivision companies. And so the question is, how much do each of them need to cough up? Are we just going to divide that $6.9 million by 3, and that's how much they have to give? Well, that wouldn't make sense because it looks like the surveying division is so small compared to the other companies, both in terms of employee numbers and in terms of base revenue. So what this A through D is doing is suggesting a couple of different ways for us to allocate the costs to these cost centers. And a cost center is someone who is incurring indirect costs. So the reason why we have this $6.9 million in indirect costs the reason why the parent company has to pay rent, taxes, insurance, is because of the activities of these 3 subdivisions. And so it's not like they're just taking that $6.9 million just for fun. They're going to use it to cover the costs that these 3 companies are incurring, the indirect costs. All right, so I'm going to stop talking, give you some time. Feel free, of course, to collaborate with your classmates as you go through these questions. If you need help figuring out what to do or how to interpret the problem statement, I'd be glad to have you working together on this one. Okay, so part A is suggesting that maybe the best way to recover indirect costs is just on the basis of how much revenue they're making. And so that means that if you're thinking of these indirect costs as kind of like a tax that the parent company is levying on the affiliates, then it's suggesting maybe you'd have to take more from the excavation company because it's generating the most base revenue, so therefore it should cover most of the indirect costs. But there are certainly other ways of doing it, and so when they have to recover these amounts, then the sub-companies are going to have to pass those expenses on to their customers. And so they're doing it like with the surcharge. And sometimes you see this like with air travel or with package delivery. Like if you get an itemized receipt for an airline ticket, there will be fuel surcharge and airport surcharges and sometimes just surcharges that you don't know what it's for, but it just has maybe like a 2-letter abbreviation. So if this, for example, if the excavation company is going to pass that expense on to its customers and they're going to do it on the basis of the volume excavated, then that means that they're going to have to add on an additional $29.92 for every cubic meter of volume that they excavate. So if they have $5.3 million that they're trying to recover and they excavated 180,000 cubic meters, that means that the surcharge is going to be $29.92 per cubic meter. So then you do the similar thing with part C and D to figure out, what are the pass-along charges in terms of dollars per meter of steel, in terms of just a percentage that the surveying division is going to charge as an indirect cost surcharge. And these things are real. Like when you're doing an engineering project, it's pretty common to know what is the indirect cost that your design engineer is dealing with. Or when you're sponsoring research sponsoring agencies know what the indirect cost charges are for the universities that host research and so on. So you can see what the cost per meter of steel would be for the assembly affiliate, and then for the surveying division, we don't have any direct data like measures of their productivity in terms of anything other than the base revenue. Like if we knew the number of projects or maybe the number of acres that they'd surveyed, we could have used that, but all we've got is the base revenue. So it's suggesting here that we just calculate an indirect cost factor as a percentage. And you can calculate that percentage as just a ratio of the 54, I guess it's 554, so I've written it wrong there, but I think the calculation itself is correct. 554, 511 divided by the 1.4 million is the same thing as this. I solved it this way just because we usually think of the overall cost as being the direct cost and the indirect. And so what we know is that the $1.4 million is going to be the direct costs, and so that represents the 1, and then the F is the indirect cost. So we're saying that the direct and the indirect together are going to be the sum of the 554 and the 1.4 million. So in any case, as I was circulating around, I think most people saw that it's going to be 39.6% is the indirect cost rate. So what you've just done in this in-class exercise, that's called indirect cost allocation, and it's just the activity of figuring out how much each division is going to have to pay to cover these indirect costs that arise. Does anybody have questions from that first part of today's in-class exercise? Okay. Activity-based costing is similar. And the key to understanding activity-based costing is, first of all, this term that we've already used in the first in-class exercise, the idea of a cost center. A cost center arises because there are costs that are being generated by the activity of the company. So when the company is generating Twinkies or making bicycle gears or doing surveying, the activities that it does, those activities are called cost centers because they're generating costs that the overall parent company has to cover. And so these cost centers receive allocated indirect costs. That's kind of the verbiage that's associated because the indirect costs are given to the cost center so that then they can be recovered. The activities are departments that are providing support, and so the activities have to have money to support their operations, like the purchasing department, quality control and inspection, IT department, supervising. These activities don't have a way of raising revenue on their own because these activities provide services to the cost centers rather than services to a customer that's paying for them. And so it's kind of like the activities internal to the company have the cost centers as the client. And so they're generating the indirect costs, and the cost drivers are the volumes that drive the consumption. So if you know how many equipment orders you have in a company, then you're going to know what the shipping expenses are, you're going to know the warehousing expenses, you know, the things that have to be recovered, you could allocate based on an activity. And so this is closely related to what we were doing with the indirect cost allocation. So on the back side of the paper that I've given you is a college where we've got some information related to the information technology support. And so let's say that there is a college that has an engineering division, a safety technology division, and a computer science division. And so we know how many faculty are in each of those divisions. We know how many students they have. You can see that we know the computers and the number of support calls per week that go to the IT support staff. On the paper that I've given you, it only has a part A and B, but will you please write a part C that we also want to figure out on the basis of the number of students. So what we're going to try and figure out is if this information technology budget has $145,000 that needs to be recovered, then how much should each of these three divisions pay? And so, of course, a simple way of doing it would just be divide this IT budget by 3, and then each one of the divisions has to pay a third of the overall budget. But then, you know, who's not going to like that? Well, the safety technology division, they'd say, why should we pay a third when we have fewer students, fewer faculty, and fewer than average computers? So the safety technology probably would say, well, it's really not fair for us to pay a third. But then maybe the computer science department should say, well, you guys should pay more than a third, because if you look at the support calls, the safety technology division in this theoretical example, the safety technology division has so many support calls. And so maybe the computer science would argue maybe the allocation should be on the basis of support calls rather than on some of these other factors. And so you could argue it a lot of different ways. So let's see it from these three different perspectives. How much would you have to recover from each division if you're doing it on the basis of support calls, on the basis of number of computers, or part C, on the basis of the number of students? So you can see that the basic approach for each one of these is going to be you total up how much of the characteristic there is. So if you're doing it on support calls, you'd add up the total number of support calls per week, so it's 13, and then the engineering division is going to have to pay proportional to the number of support calls they get each week. And so it would be $145,000, which is the total expense that has to be recovered, and their share of it is going to be 5/13 of the overall expenses, because the theory here is that maybe the budget of 145 is covering the support calls. So you can see that by this model, the safety division would have to pay the most because they have the greatest number of support calls. But there are other ways of looking at it, and you might expect that the safety division wouldn't want to use this model for the indirect cost recovery. They'd want to maybe look at the number of computers. So if you do it that way, they'd have the lowest allocation because they have the fewest number of computers. So there are the numbers for if you do it on the basis of the number of computers. And then the last way is if you do it by the number of students. So which do you think is the right way? What would be the approach? Well, what did we talk about at the beginning of class? We said that you should try and recover the indirect costs in a way that as closely matches what's causing those costs. And so what we need is we need more information about how is that $145,000 that's going to the IT department, what are they using that for? Are they using it to buy computers? Well, if so, then maybe the number of computers would be the way to allocate the expenses. Or does more of that money go towards the people who are doing the service calls, or what do we call it here, support calls? You know, maybe the majority of their budget. So what we'd need to do, if we were being really rational about this, we'd look at, of the money, of the $145,000, how much of it goes towards computers, how much of it goes towards faculty support calls, how much of it goes towards expenses incurred by the students, and maybe you'd have a blended model. You know, actually, maybe what you'd do is you'd come up with these numbers, and then you do a percentage of, you know, maybe if 30% of the expense was related to the computers that they have, maybe 30% of the costs would be recovered this way. And so you do kind of like a second layer of weighting. So that's the idea associated with activity-based costing. Are there any questions here on this one? All right. I really want to emphasize how valuable it will be if you follow along in the textbook. You know, for the last, I think maybe actually for the entire semester, I've been telling you which textbook sections go along with what we're doing in the lecture. And so there are examples in the book that are above and beyond the examples that I show you. Those are valuable to look through those calculations. And if you're struggling, maybe solve the example that's in the book just to reinforce in your mind, and, you know, read through the explanation of the concepts. Because I can tell you from one point of view, but there's another point of view out there, the textbook author, who's thought about this for a long time. And so do yourself a favor and start preparing now for the exam so that it can be an easy, comfortable experience when it comes around. All right, just one last look at this announcement here that your homework is due on Thursday. So please let me know if you've got any questions. Feel free to stop by my office hours. I'd be glad to help you out. That's it for today, and I'll see you on Thursday.